Hello, today is June the 10th, 2017. I was pretty negative at my last call. I said that even though this was a pattern, which almost always either closed at the day's high or hit a new high shortly after the open of the following day, I thought it would be the exception to the rule and that prices would drop. Well, it wasn't an exception because we gapped up, promptly took out the high, and that kills the call before the open. However, we did see lower prices at some time anyway. This was an optional target. I don't usually keep track of these if they don't print on time, but this one printed on Friday and it was a perfect Fibonacci delineator of the length of the decline. Maybe I should keep track of these for a longer period of time. As far as the daily pattern is concerned, I'm looking for a pattern on Monday with the same time frames as we saw Thursday. Almost always this pattern closes near the high or sees the high shortly after the next day's open, but if it drops it can be a straight line down. I think that's on the table. Let's go over a few things. Here was the MEJT pattern. The only thing it said is that this drop is a false move, gives us a target of 24.3766, most likely to print when the market reopens Monday. However, I think it might fail. Don't forget, MEJT likes to leave a failed target at major changes in trend. Well, what's negative about the pattern here once again is that we couldn't hold on to all these highs at the close. It's a rising market that can't hold on to its highs. But here, after breaking out to new highs, we invalidated the break immediately, closed red, and all we've done so far is have a rally back to prior resistance. There's a lot of negative stuff here. This is the old VIX. It shows the amount of premium investors are willing to pay for puts. It traded at 8 and a fraction. Very recently, that's as low as I've ever seen. It certainly is. It shows less pessimism than we saw at the major top in 2007. Here's the daily chart with our DeMark sell signal. The time date that I had was June 3rd. As far as the closing prices are concerned, that told us of the high. When you have the weekly in alignment with the daily, it's a very negative signal in DeMark's work. And when it drops, when it works, as I think it will, you get major drops. How major? Well, this is the basic pattern I think we have. Here's 1, 2, 3. We're in wave 4. You'd like to see C of 4 have some sort of Fibonacci relationship to wave A. There were a number of possibilities. You just set the height of A equal to 38.2, draw your grid. Ideally, you want to see a retracement within the fourth wave of lesser degree. That's here, gives us 1921.04. That would be over a 20% drop. Don't forget, this is the second longest period in history which we have gone without dropping 20%, so we're quite extended. The important thing about this 1921 figure is when you realize that if you take the top, multiply it by 0.786, you get a number which is almost the same, and if you take this last rally here, here's your 61.8%, you get almost the same number again. So all we need for confirmation here is to take out this low, and if we do it in impulsive style Monday, which is on the table, then the big drop I've been looking for should begin. It should last months, and the 1920s, if this works, I think the 1920s are a plausible target, and that's today's call.